thanks for joining David, Kevin, and myself for our educational video for the month of October. Today, Kevin and David are going to talk about some really hot topics. One, our interest rates, and two, and more importantly, our mortgage rates. So I'm looking forward to hearing from them. And as always, if you have any questions, please don't hesitate to give us a call.
Kevin, why have interest rates gone up so much this year in 2022?
Plain and simple, it's inflation. The central banks are trying to cool demand, and the main tool they have to do that is interest rate policy.
Where are interest rates now?
Right now, or today, the best 5-year fixed rate mortgage is 5.04%, a figure that's up about 140% thus far in 2022. On the variable rate side, the best rate today is 4.55, and that rate is up about 180% this year. Now, the Bank of Canada does have another policy meeting on October 26th, and it is expected that they will increase rates again to try to cool inflation.
Kevin, what's a trigger rate?
A trigger rate is applied to a variable rate mortgage that has a static payment, and that means even though your interest rate is fluctuating up and down, the payment that you make to the bank every month is the same. Now, as interest rates climb, less and less of your payment is going towards the principal of your mortgage, and more of it is going to paying interest. The trigger rate is the rate at which you are no longer paying any principal towards your mortgage payments, and the amount that you're paying is not enough to cover the interest owed. Now, at that point, the lender will renegotiate your payments and the term of your mortgage, and your monthly payments will go up.
Right.
Now, many variable rate mortgages are getting very close to hitting their trigger rates. In fact, right now, if the Bank of Canada does hike rates as they are expected to, many people will be forced to renegotiate payments and terms and increase their payments to their banks. Now, that being said, if someone has a variable rate mortgage, what should they be doing right now?
It's a good question, Kevin, and that's the question that I think a lot of people who have variable rate mortgages, who may have these trigger payments upcoming, are wondering. And I think the main piece of advice for people is don't panic. Obviously, if you feel like you're going to struggle making the payment that's going to be triggered, or if your payments have gone up already and you're starting to feel, I guess, the stress of those payments financially, it is something that you'll need to make a decision around, because rates, as you said, are probably going to go up at least one more time, and maybe even another % or so from today's rates. So the payments will continue to go up for a variable rate mortgage, but in our opinion, probably the worst thing to do at this point in time would be to lock into a new 5-year fixed rate at today's rates. The reason being is, as Kevin said, the best 5-year fixed rate on the market right now, which isn't even necessarily what you might get from your bank, but setting that aside, the best 5-year rate right now for a fixed rate is about 5.04%, and the best 5-year variable is 4.55. So right off the bat, if you lock in, you're going to be paying a little bit more than you're already paying on a variable. Now, albeit, again, the Bank of Canada is probably going to hike again on the 26th of October, and we may even get a couple more after that. So it's pretty much guaranteed that you will be paying at least that 5%, if not a little bit more at some point over the next year on a variable rate mortgage. However, what you have to do is have an eye farther down the road, knowing that if you lock into a 5-year fix now, you're basically guaranteeing that rate all the way till 2027 now. And the expectations for the yield curve are such that a lot of central banks are forecasting rates will eventually come down at some point, maybe as early as the middle or late 2024. And so on the back end of your term, you may end up paying quite a bit more on a 5-year, if you renew to a new 5-year fixed compared to a 5-year variable. On your screen, you can see a graph from Mortgage Sandbox Analysis, which synthesizes forecasts from all the major Canadian banks for 5-year fixed and 5-year variable rate mortgages. Both the graphs show interest rates peaking middle of 2023 and then declining thereafter. Another graph shows the US Fed's projections for interest rates. The Fed's current projections show interest rates peaking somewhere between 4.5% and 4.75% by the end of 2024, and then coming down thereafter. So both of those should give you pause before locking into a new 5-year fixed term that will set your rate above 5% all the way until 2027.
If you're someone who has a mortgage renewal on the horizon, the landscape's going to look quite different from the last time you renewed. As David mentioned, the most important thing is don't panic. It's easy to get stuck looking only at 5-year terms for mortgages. For many of us, that's the only way we've looked at mortgages since we bought our first house. But interest rates can't go up forever. As David discussed, the interest rates increases we've seen over the last year have been amongst the most swift and significant in history, considering that we started close to zero at the end of 2021.
Mm-hmm. If you're somebody who's really worried about being able to afford making payments if rates continue to rise longer than perhaps are being forecasted currently or that we might expect, you may want to consider a midterm option, something like a 2 or 3 year fixed mortgage, so that you're not over committing to a 5-year rate at this point in time, but you do guarantee your payments at a certain rate for the next 2 or 3 years. And chances are by 3 years from now, we should see interest rates certainly have leveled off, or more than likely are going to be actually declining well before 3 years from now. So it gives you an option, penalty free, to sort of fix your rate for 2 or 3 years, and then maybe consider going back into a variable 2 years from now or 3 years from now, when hopefully rates are back on the back end and they're starting to decline again.
As always, if you have any questions, feel free to call Harry, David, or myself anytime.
Take care.